Are you a first-time home buyer and overwhelmed and confused with home mortgages? Well, you are not the only one. And today we're going to be going over the top 5 things that you should know about home loans. Hey guys, I'm Jessica Kirker, your Western Washington realtor here with Realty World Costner & Associates. And today I'm here with my friend and loan officer, Jason Gillespie with Summit Funding here in Chehalis, Washington. Thanks for being here today.
Thank you for having me.
Yeah, absolutely. I know that I work with so many first-time home buyers and they're all asking me the same types of questions. So I thought it'd be great for my audience if you could be here and just kind of answer some of those questions for us that they may be having. And then if they have more questions afterwards, I know, Jason, you're more than happy for them to reach out to you directly.
Absolutely.
So let's just get started with the top 5 though.
Cool.
All right, so Jason, I know one of the main questions I get on a regular basis is what's a pre-approval? I'm always telling my clients, let's make sure we get you pre-approved before we go look at homes, and they look at me kind of confused.
Yeah.
So could you kind of go into that?
Yeah, so it depends on what company you're working with, but a pre-approval in my world is we take a full look at your application. We take a full application from you with your all of your information. We pull your credit, and not only just pull your credit, we actually get your documents from you. So we look at your pay stubs and your W-2s and bank statements and tax returns and things like that, so that we know how much mortgage you can afford and how much you can qualify to buy a house.
Okay.
Yeah.
Well, that's pretty simple.
Yeah.
I do hear a lot of my buyers asking what the difference between a pre-qualification and a pre-approval is. Is there a difference?
Yeah, absolutely. So a pre-qualification is essentially just a credit pull. So there are a lot of lenders out there that will allow you to just go in, give them your name, date of birth, social. They'll pull your credit. If your credit's good enough, they will issue you a pre-qual letter based off of the information you've given them. So like you tell them, hey, I make this much money, I have this much down, and they'll give it to you. The problem is that a lot of times people think that they make a little bit more money than they do, or sometimes they think that they make less money than they do, so you could actually qualify for more.
Okay.
But if you don't actually have full documentation, it's not a pre-approval, it's just a pre-qualification.
Okay, so it's pretty much a more for sure thing for the
Correct.
pre-approval versus the pre-qualification.
Pre-qualification is unverified, so all it is a credit pull.
Okay.
Next thing we're going to talk about is what do I need to qualify for a loan? So basically what we need is you to work on your credit, make sure that your credit's good, to kind of go over that. 740 and up is excellent credit, 700 to 740 is good credit, 660 to 700 is fair credit, and below that's not quite great. However, we can go down clear to 620 to do a loan.
Okay.
So credit is a big part. The next part is income, like we talked about in the pre-approval. So working on having job consistency, the rule, which is not a hardline rule, but the rule of thumb is 2 years employment history. If you're self-employed, we need a full 2 years tax returns, but having 2 years of anything like a bonus or overtime income so that we can count that tips. So income being the second piece. The third piece is assets. So that's not only down payment. People think down payment, but it's down payment, closing costs, and also reserves. So a lot of times people don't realize that, but
what are reserves?
So reserves are when we're looking at a mortgage application, especially if someone has that fair or worse credit, what we like to see, or what underwriters like to see, is that you have reserves in your bank account after you've made your down payment and paid the closing costs, right? So when we're looking, a lot of times we like to see 3 months of the principal, interest, tax, and insurance payment. So 3 months of your monthly payment saved in a bank account or a retirement account.
Okay. So one of the actual top questions that I'm getting from buyers, especially first-time home buyers, Jason, is how much money do I need to put down?
Oh, yeah. Well, so it's a question of how much can you afford versus how much does a loan program allow you to put down. So I would say put as much down as you can with leaving yourself a proper number of reserves in your bank account. But certain programs, conventional will allow for 3% down for a first-time home buyer.
Okay.
FHA allows for 3.5% down of the purchase price. And actually with USDA and VA, you can do 0 down. And then another thing is we have a state bond programs that will allow you to do 0 down as well.
Okay, wow. So you can really potentially get into a home with almost nothing out of pocket, it sounds like. So that would be a great deal for a lot of first-time home buyers.
Absolutely, yeah.
Well, what about PMI? This is foreign to so many of us. I know first-time home buyers have no idea.
Yeah, PMI stands for private mortgage insurance. So essentially what that is if you're doing a conventional loan and you're putting less than 20% down, it's required by both Fannie Mae and Freddie Mac. So essentially what it is the mortgage insurance insures the lender in case you were to default on your loan. So if you didn't make your mortgage payments, the mortgage insurance company pays the lender a portion of the mortgage that got foreclosed. It's completely useless for the buyer. So if you can put 20% down, you should sometimes. Also, to kind of throw a little curveball, which I'd love to talk offline with any client, but there are options to buy out your mortgage insurance up front and to wrap it into the loan. Yeah.
Oh,
yeah.
That's interesting. So Jason, thinking that buyers might not have to put money down on their loan,
Right.
but they're going to potentially have to pay money at closing still, right? For closing costs?
Right. So when you're buying a house, there's down payment, there's closing costs, and there's actually reserves as well. So, but closing costs are essentially made up of like the origination fee from the lender, appraisal fees, flood certifications, title and escrow fees, recording fees with the county, any inspections that are required, and also your upfront. You have to pay for a full year's insurance. And you have to pay a certain amount of property taxes depending on what month you're closing, so that the property taxes can be paid. In Washington, it's in April and in October. So closing costs and prepaids are all wrapped into there.
Okay. But aren't there certain ways, I mean, do they have to pay closing costs, or are there different things that they do on their end?
Yeah, so there's ways for your realtor, which is where Jessica would come in, to negotiate the seller to pay your closing costs.
Okay, but that's allowed through the loan program. So,
correct,
right?
yeah.
Okay.
So and there's certain percentages of the purchase price that are maximums for conventional. With the minimum down, it's 3%. That's kind of a standard number, is 3% closing costs.
Yeah. So absolutely, that's one of the places that I come in as your realtor, especially with first-time home buyers, is I have a lot of buyers not wanting a lot out of pocket at closing. So we negotiate at the time of the contract if the seller is actually going to pay what you would normally have to pay at closing. So you're potentially looking at a zero out of pocket.
Yeah.
And I've even had buyers get checks back at closing, which is pretty exciting that they get a new home and a check in their pocket. So there are definitely some options. I think that pretty much rounds out the top 5 things. I know there are additional questions, so if you guys have some, feel free to reach out to myself or Jasik directly.
Yeah.
I'll make sure to link all of our info in the description box there below for you, and we'd love to hear from you. So
Absolutely.
yeah, thanks for watching, and thank you for your time today,
Thank you
Jasik.
for having me.
Yeah.